Hello traders, welcome to Trade Forex with Gabe. My name is Gabriel Ujimada and this is the weekly Forex Forecast. We will be looking at market setups and trading opportunities for October the 23rd through to October the 27th. If you traded with us and you subscribe to this channel, I want to really believe you smiled to the bank last week, October 16th through to October the 20th, when we analyzed the Swiss franc pairs to the upside against GBP, Euro, AUD, New Zealand. Now, funny enough, this is also setting up to be the best pairs to trade for this week, and I will be here to bring you all of those setups, and we will look at it once more. But before we begin, let's look at what the fundamentals are saying for the week before we get back to the technicals of the market. The week is pretty jam-packed with a lot of high-impact news starting from Tuesday, where we will see claimant count change on Great Britain pound, and then the flash PMI news affecting euro. We'll also have Reserve Bank of Australia governors speak on Tuesday, and then another flash PMI news at noontime, which will affect USD and the Great Britain pound. Now, on Wednesday, we will see important news that will affect the Australian dollar, that is the CPI data quarter in quarter, and then CPI year in year data. And then we also have the trimmed main CPI quarter in quarter. Wednesday also, we will see interest rate decisions coming out from the Bank of Canada, where we expect them to maintain the rates on 5.0% basis point. Then on Thursday, we will see refinancing rates, which is the interest rate decisions to affect the euro, where we also expect the Eurozone to maintain the interest rate at a rate of 4.50. We'll see advanced GDP data coming out also on Thursday, and unemployment claims also on Thursday. Friday, we'll see core PCI index, very important news also to affect the dollar on Friday. Well, it is going to be a very high volatile week, but then I will be walking you through what my thoughts are as it relates to trade setups for the week. So let's jump back on our slides to see what the data is looking at. So into this week, Swiss franc is coming out to be the best pair again for the week, and we see that loss in momentum on United States dollar, and this is why USD will not be my preference, although we see some setup on it, but I'm not going to prioritize my trades on it. Swiss franc is still one of my best plays into the week. You will see we will be pairing this up to New Zealand dollar, Australian dollar, Canadian dollar, Japanese, Great Britain pounds. Euro is still not the best for me, so I wouldn't want to put my hands on that, but then I will still walk you through that. But my best short pairs will be GBP, Australian dollar, New Zealand dollar. I would like to stay away from Canadian dollar as well, and Japanese yen dollar, because the week is looking to be a risk-off mode. So risk-off mode, we will the commodity pairs such as NZD Australian dollar will be the most affected when we have a risk-off mode in the market. That will also favor USD and Swiss franc pairs. So without much ado, the best pairs to trade into the week for me are Swiss franc pairs, and that is Great Britain pound to the downside again. This was the pair we traded last week. It performed fantastically well. Also, we traded last week Euro Swiss franc, which performed really, really good. But then this week, we will be having interest rate decisions to affect it. So I would like to stay away from that for now. So I'll focus more on GBP Swiss franc to the downside, Australian dollar Swiss franc to the downside, NZD Swiss franc to the downside. Then on USD pairs, some of the pairs I'm looking at to trade also will be GBP USD to the downside, NZD USD to the downside, Australian dollar USD to the downside. But as I said earlier, these are not my best pairs going into the week, but I will analyze it for you so you take a decision on what you would like to trade. But these are my best pairs. Again, going into the week. So let's look at it in case you traded it last week. So this chart shouldn't come to you as a surprise or something mysterious, but last week this was a fantastic trade into the week. When we started the week, I told you wait for those retracements into the fib levels of 38, 50 or 61. Price smashed through 38 fib level to 50 fib level, and exactly at the 50 fib level we started seeing the sell-off again into our profit target. And I gave you the profit targets. This is the first one, which is the last low, and the second one we weren't able to, price was not able to make it to that level, and I'm hoping that that will happen this week. So into this week, just 12 pips, we missed our targets by 12 pips. Okay, we missed that target by 12 pips. So going into the week, all we need to do is to recalibrate. So our fib levels, recalibrate our fib levels. So what we are expecting to see into this week, so let's take out the last week's profit targets. Okay, so going into this week, any correction, this correction could even trigger. So I wouldn't want you to panic even if we have a correction down to the last high of last week. Okay, this is Euro Swiss franc. So because of the interest rate decision, I don't want to preempt you to start selling off early enough. So we could have a really correction into the last high of last week before we begin to see the sell-off again. So if we begin to see the sell-off, profit targets will be, first of all, the last target of last week, which is 0.9405. And if we see further sell-off to the downside, then this will take us down to 0.9370. But don't forget, I expect to see that correction, that correction way up into the high of last week. So it all depends on you where you would like to start selling off from. Well, but I can give you a clue. If we start seeing those correction, all you need to do is to get your trend line tool and mark the support. So when we start seeing price break away from those support lines, then that will be a trigger for you to start selling up, just like we had in the past. You see that? So you pull out your trend line tool and wait for that break below the trend line, then you can begin to sell off. So that should be the same scenario into this week. Next on the line is GBP Swiss franc, and this was a fantastic trade into the week. Let me take you down to H4. And on H4, we saw price sell off into our first and our second profit targets. This was a fantastic trade. I want to believe you all smiled to the bank last week. So going into this week, what are we expecting to see? I'm expecting to see just to recalibrate our Fibonacci tools. So if we're recalibrating, this is what I expect. So we will expect to see another correction into the 38, 50 or 61 level. Now, let me give you the bigger picture to this. Let's delete this because this last week was really fantastic. So let me take this out. I'll leave the profit targets for this one because I really expect price to take it out again. So look at the bigger picture. The bigger picture gives us this scenario that we have a breakout from a ranging channel. You see how price has been retesting this channel to the upper boundary and to the lower boundary. And finally, last week, we saw the breakout from this channel. So the profit target for this channel is massive. So I've given you all the levels so you can decide to take any of the profit targets which is convenient for you. But I would like you to expect that retracement at least into the 50 or to the 61.8 fib ratios. Now that would be the best place for you to start looking for a new level to short into. First target, last low for last week. So let's take this out. Last low will be here. So once price is able to retrace into the 50 to 61.8 Fibonacci ratios, then we can begin to expect new sell-off. And you know what? That will also correspond to a rebound from the breakout point. All right. So when price breaks out from a key support area, you expect that retest. So that Fibonacci ratio levels, that is within the 50 to 61, will give us that needed retest of that breakout level. You see the momentum we used to break out from that from the lower boundary of that big channel. All right, so that is exactly what we're expecting. Retest, sell off again into the 1.0781 level. If we make a further sell off, we will see price descending towards the 1.0729 and the 1.0650. And the final profit target for this channel, for the breakout of this channel, will be 1.0550. But I don't expect all of this to pan out this week. All right, I don't expect everything to play out this week. Okay, then we will see. Some of the pairs we also traded last week, which is resurfacing this week again, is Australian dollar Swiss franc, NZD Swiss franc. So we can look at NZD Swiss franc. This one performed extremely well. Too good, too good. Now look at it from the bigger time frame on D1. What we had, let me take you down to what we traded last week. So last week we started here. This was where the week started, exactly here. I told you wait for this correction. We retraced. We couldn't make it into the 38.2 fib level, but we sold out, smashed our first profit targets, second and third. You know, this was a massive profit targets up to 128 pips. We were able to bank. In last week up to 147. You see that? 147. So let's look at what this week will hold for us. So all we need to do is to recalibrate our Fibonacci levels, and that will be to this point. Let's take out those profit levels. Just a moment. Delete, yeah, just delete this one, delete this one. Just a moment, we have to take this profit target out too. Okay, so we have a clear run now. So if we're able to see price make that needed correction, this was a massive sell-off, you know. If we're able to get some correction into 38.50 or 61.8 fib levels, then this will present us with a good place to short again. So if we're able to get that retracement, my first target will be to take out this last low. Exactly, this low is corresponding to the low of many weeks back. You see that? So if I'm able to see price retrace into this level, even the 38 level will be a good place. That should give us about 63 pips. But my target for this week is for price to sell off to 0.5110 level. All right, but I would like to see that correction. But if price is able to break past this support level with good momentum, then I'll just go in big time and sell off towards this next key level. All right, so that's NZD Swiss franc. So look at the bigger picture, what we have here. That should give you some ideas where we are headed into the new week. So let's say the new week should start here. Once market resumes, we will see what the market holds for us. Next on the list, what we traded last week again was Australian dollar Swiss franc. It's also popping up as one of the best pairs to trade into this week. Now look at this fantastic trade we had last week. So we had that needed correction we predicted, and it's corrected into the 50 past, it went past the 38.2 fib levels onto the 50.0 fib level, and from there we began to see the sell-off in market. So we took out our first profit target, unable to take out the second one, but we missed it by just a few pips. You see that? So going into this week again, I would like to see, let me take this all out, delete selected. So I would like to see price, yeah, this is what it should be. So I would like to see some new corrections. Okay, if we see that needed correction exactly here. So when we begin to see price correct again into, sorry. All right, so what I want to see is that price should give me that needed correction into 38 all the way to at least 61 fib ratios. This would be my fantastic place to look for new short position to take out the last low, and my target for this week is 0.55562 level. So if any of this level we're able to achieve, this will give you some nice pips into the bank, about 50 pips. 50 pips is fantastic, you know. With a 0.1, that's $50. With a 1.0, that's almost $500 in your purse. All right. So all depends on you, what lot size and risk exposure you are looking to trade. Let's look at what other pairs do we have. Great Britain pound, NZD, Australian dollar, USD. Okay, so let's look at USD pairs right now. I'm staying away from Euro USD. So what I would like to see is to trade GBP USD. Okay, so trading GBP USD, this pair has been ranging. Okay, it's been ranging for throughout last week. It pretty much did not go anywhere. So I want to believe that this will be that week. If we start seeing risk-off setups in the markets, then we start seeing new appreciation of the dollar as a safe haven asset, then that means the pounds will have to pay the price. And that will mean a new sell-off after this last week range, new sell-off into 1.2060 level. If we see a break below that level, then the next target will be 1.2013 level. Now, the pip distance for that, first one should give us about 100 pips into our bank, and the next one 148 pips into the bank. All right, but watch out for you can go down to smaller time frames, you know, if you want to find your entry point. Okay, if you want to find your entry point. So if you take this to lower time frame, you could find like a little channel here. So probably anything on this level, we should start seeing some this could be that needed place. We should start looking for a good entry point. Okay. All right, so let's look at the next one, and that's Australian dollar USD. Australian dollar USD, and that is the same scenario we also have here. Price has been ranging last week, pretty much did not go anywhere, but I think this will be that needed week where we'll begin to see a sell-off on Australian dollar and more appreciation on the USD. So if that begins to play out, then our target will be to sell into our new key levels of 0.6270. Now let's take a make a readjustment of this. So this could give us something like this. So if we begin to see price play out, you know, to sell off to the upper boundary, let me take this out because it's not making the needed sense I wanted it to make. So let's say this is our new key area of support. Let's make it a bit thicker to show that it's really key. It's a key level there. So if price bounces from here, makes it to the upper boundary, that would be a fantastic place to give us a good risk to reward ratio. So somewhere around here. Okay, but then our target is to sell all the way to 0.6210. Let me see what that could give us, potentially about 100 pips. All right, but you'll get a good risk to reward ratio if we're able to see price retrace into this next key level of resistance. Okay, and let's go to the last pair, and that's NZDUSD. NZDUSD. Now, this is a fantastic setup we have here. You could see that we have a breakout from this channel. We had a retest, and now we're beginning to see the sell-off again. We also see the breakout from this key level. Let me show you that level in case you want to replicate this on your chart. So price broke out from this key level here and also made a retest. So from two key levels, we've made the retest. All we wait to see now is that needed sell-off towards our key target of 0.5756 level. If price breaks below that level, finally we'll see price drop towards 0.5716 level. All right, traders, this is where I'll draw the curtain for the week, and I want to wish you all the best. Don't forget to apply proper risk management as you trade into the week. We have a lot going in on the markets, the Middle East war. We have oil price looking to skyrocket if Iran joins the war against Israel. We have Ukraine war, and Russia positioning their ships across the Black Sea, threatening the US new ships that has just entered the Meridian, that's the Mediterranean Sea. A whole lot going into the market. So we are looking that it could be a new setup for risk-off sentiments in the market where traders are looking to preserve their capital or trade defensively, preserve their capital by buying into safe haven assets, and that's like Swiss franc, United States dollar. All right, traders, that's the last note I would like to leave for you into the week. Trade carefully, be profitable. Until next week, bye-bye.